running, so let's get started. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for March 2nd, 2021. Q is down 1.6, SPY down 0.78. Ending the week last week, we were bearish on the Qs and SPY as long as we didn't take out Friday's high, right? Here was Friday's high. So then on Monday, as we gapped up and took it out, then we were neutral because this downtrend was breaking on the hourly, and we're going to go neutral and basically let the range establish and then work on a bullish bias above and a bearish bias below. That's what we're going to be working from. So far, because we didn't continue the downtrend on the hourly, we took out the reference point. We now have a bit of a double top here along with the double bottom. So the anticipation of some sideways price action for the immediate future so far is playing out. Okay. Now, the sideways bases and trends aren't all created equally and in the market. Sometimes that can lead to not a lot to do, or it can lead to plays that work in either direction. And that's actually what we've been seeing the last few days. Okay, as the market's kind of working through this range, and especially like Friday market kind of closed more or less where it opened. There are a lot of all-day holds, plays that worked all day. And we'll see that again today, that there were a lot of plays that did kind of work all day, especially to the downside. But let's go ahead and take a look at some of the plays from today. Okay, going into tomorrow with the range that I've highlighted, that's really what we're going to wait to see. I wouldn't be surprised if we get back to the lows here to retest. But as far as a larger, longer time frame bias, still going to be neutral going into tomorrow. Okay, because we have kind of conflicting time frames. So that's really more than anything what led me into expecting some sideways price action for a bit. Is that you can see the hourly was starting to weaken, daily was starting to follow, but the weekly and the monthly still are bullish. SPY's really not that far off the highs, and then Qs are clearly still in an uptrend, and then the weekly actually looks like a good kind of buying point off of the rising 20. So it's that conflict of time frames, which is why I was expecting, okay, well, kind of this is going to need to work itself out. Probably get some range-bound price action. Okay, so let's take a look at some of the plays from today. I won't get that much into the short plays because I kind of missed them myself. The thing that I wanted to point out, though, is that we're having a lot of these plays. The gap downs are just going all day. Okay, INSG, Triple D, and then INO. Okay. An article was sent out yesterday on how to manage these, what you should be looking for on which plays should be held all day. Okay. And these are all pretty good criteria. You got the gap, you got the pickup in volume, you got the change of the weekly trend. You have lots of basing and breakouts, on these breakdowns, right? Basing, retracements. You don't want to see it accelerate too early because otherwise that's typically going to put in the bottom. We can add AI to the list as well. You can see this did accelerate towards the end, but as long as you're getting these retracements and basing and you got the play, pretty good to just manage hourly bar by bar a runner play. So we saw that on Friday too, VST as well on Friday. So that isn't something that we've seen in abundance the last few months prior to the last week or so. So that's what we'll be looking out for tomorrow, rest of the week. But there were some plays to the long side as well. The Perry gave you the numbers on this play here. Was earlier in the morning there. Yeah, I was trying to do a base breakout there. That wasn't able to hold. But right in here was the numbers that I gave you right there. Gave some follow through. Didn't trail out until the hourly here. So Even on the longs, that was what I was anticipating as well. Sticking with it, did finally trail out there. Did get to a couple R target there on that breakout. So it had a hard time, I think, holding up with the market being as weak as it was. But you can see, like here on the 15, never really breaks the uptrend until it really trails off the hourly. So this was fine. Not a big play on the PERI. This one was, though, and unfortunately did not play this one. So kind of missed some of the good stuff today, unfortunately. But I did mention it here, over 450. If you were listening in while I was on the mic, I was saying, you know, I like this gap a lot. For right now, there's no play because it's kind of downtrending on the 5. It's underneath the 20 MA on the 5. We'll have to wait until this gets above it and gives us a setup. And there it gets right back above it, starts to base, and then there's your play. So there's that 5-minute base. Didn't spin very long there setting up. I think one thing that's tough about this setup here is, you know, the stop can go here. That's fine. Underneath the base, it's very, very tight. I think if I had kind of decided that, yes, it was worth a shot, then I probably would have gone with that as the stop. Just a little bit more of a secure stop. And then if it moves away from it, raise the stop and then, you know, kind of reduce the risk. That's probably realistically how I'll play it. The next time I'm in this situation, it doesn't have to be this symbol, obviously, but in this situation, because at this time, you know, lunch is ending and we're switching to the 15, and on the 15 it's going to be extended. So I think that would have been the right compromise to make. Now, of course, you could say, well, why don't you just do the tight stop? Because that obviously would have been a home run. Yeah, but I'm saying, you know, next time I'm in this position where it's a little bit extended, we're moving to the next time frame up. And this also, you can see, is a little bit whippy. So, you know, you can do it with the larger stop, and then as it moves away, you can raise the stop. Because I think this is technically where it's supposed to go, but it's just easy to get shaken out of something like this. And I think it's only like a 5-cent stop. Yeah, it's only like a 5-6 cent stop. This is really easy to get shaken out. This does change the stop to be more like 15 cents, 16 cents. But I think that would have been the best way to play it. And even with like a 15-cent stop, you still have a max potential there of 58 cents. So that's almost 4 Rs, right? So, yeah, so that one is a miss. Was pretty good as far as the gap. And then the setup's not too bad. Okay, but nice follow through there. I think this one does, yeah, end up closing up here towards the high. So, you know, the good thing is we're working out of earnings season. Earnings season is winding down. The list is, we still have some stuff on the list, but there's less. But there's some decent follow through to either direction, even though the market for the past, 1, 2, 3, 4, 5, 6 days now, it's been kind of stuck in this range underneath the flat 20 MA there. Okay, so that's what I'll be looking out for tomorrow. I didn't feel like today I did a very good job of taking advantage of the plays. Okay, but gonna use kind of what worked today, what's really been working the last few days to really guide the focus for tomorrow. Okay, hope you did well today. If not, know what to focus on tomorrow. All right, we'll see what kind of gaps we get, what kind of setups, and we'll be back at it tomorrow. Have a good rest of the day. I'll talk to you tomorrow.